Again, thank you so much for joining us today for our webinar on credit scores and reports. So let's begin. By the end of this workshop, we have 4 goals here that we'd like to share with you today. And your credit can have a big effect on your financial life. Your credit report provides a snapshot of your financial habits and that financial institutions, cell phone companies, even credit card companies, and others use to get a sense of your credit worthiness. And understanding how credit scores and reports work can help you keep your finances healthy and help you achieve your financial goals, such as maybe purchasing a new home, leasing a car, or even paying off some debts. So, on the next slide, I want to turn your attention to a question that I want you to ask yourself. How well do you actually know your credit score? Before we get into why credit scores are important, let's discuss what they actually are. And if you were like me before, I didn't have a good understanding of what my score was. So hopefully you know what it is or have a good idea. So on the next slide, just briefly discussing what is a credit score, it's a 3-digit rating that tells a lender how likely you are to repay debt. And different lenders use different criteria to calculate it, but in general, the data is grouped into 5 categories, including payment history, amounts owed, the length of credit history, new credit, and even a credit mix. So, as you can see on the scale of credit, it goes from poor to exceptional credit. And that ranges from the 579 on the low end to the 800 being closer to the exceptional. And so hopefully you have an idea of what range you're in. And we're all striving to have that excellent credit, right? And your credit can be poor or fair, good, very good, or exceptional. But what if you don't have any credit history at all? And oftentimes when I go out in the field, I speak with folks who ask me this question. So we will definitely address that today. So, on the next slide, discussing strategies to building your credit, many people, especially young people or people who have recently immigrated to this country, have no credit history. It's not a bad thing. It's not the same as having bad or poor credit, although people without a credit history may face similar difficulties in getting loans or proving their credit worthiness. However, there are many steps you can take to start building credit. And the steps are listed here, the 4 steps, as you can see. And definitely want to emphasize considering number 4, which can oftentimes be very hard to do when you fall upon hard times, right? Which a lot of us have or known someone who in the last few years in the age of COVID have fell on some hard times. But number 4, stating pay your bills on time and in full and never miss a payment is what we all want to strive to do. um, if you think you're going to miss a payment, make sure you contact that creditor and see what options are available to you. How does your credit score affect your daily life and the ability to achieve your financial goals? Well, I'd like to, on the next slide, share a little scenario with you, a tale of 2 friends. And these friends are named Anna and Bella, and they both want to get a home loan. So Anna and Bella have been friends since middle school, and they both are single now, and they both have steady incomes to pay their bills. So Anna and Bella decide to buy homes in their childhood neighborhood, and Bella receives a loan without any trouble. Unfortunately, Anna has a difficult time getting a loan. When she finally gets her loan approved, her interest rate and insurance premiums are much higher than her friends. So you can probably guess what happened to Anna, right? It had something to do with her credit. And credit scores are not the only factor that lenders consider. Factors such as market, down payment amounts, loan terms, and lender loan policies can influence the cost of a loan. Still, experts and research show that one's credit score has a large effect on the cost of a loan. And as you've seen, credit scores can affect your ability to get a loan, as well as your interest rates and insurance rates, but they also affect your eligibility for a rental home. Homeowners or property managers, they even check your credit scores before renting to unknown persons. So your credit score can have an impact on many areas of your life, such as getting a car, setting up utilities, or even phone service. So essentially, any persons or any organizations that you are seeking credit from may review your credit report to ensure that that they're lending to a responsible borrower, right? Because especially when it's a large amount of money, they want to make sure you're going to be able to pay it back and you have a good history of that. So much depends on just that 3-digit score. So the question is, who actually comes up with the credit scoring system? Well, on the next slide, we're going to discuss that. Credit bureaus. And there are many agencies that prepare credit scores, and they can use different models to calculate them. However, the most popular scoring models are the FICO and the Vantage score. There are three main credit bureaus in the United States, and they are, as you have seen pictured here, Experian, Equifax, and TransUnion. So they, along with lenders, use their own version of the FICO and Vantage Score credit scoring models. Now, these bureaus keep track of your credit history separately, so it's a good idea to utilize each one. If there are large variations or discrepancies among the reports, you should get in touch with the bureau so you can find out why. And credit scores may also be different depending on the financial product you are applying for. For example, mortgage applications may yield a different score for you than if you were applying, for a credit card. And that is true because it definitely happened when we were purchasing a home, both times. So on the next slide, calculating a credit score, as we mentioned earlier, different credit bureaus calculate your credit score in different ways. While the bureaus do not necessarily disclose the exact methods or formulas they use to calculate your score, we do know the general factors they consider. The most important factors that affect your credit score are your payment history and the amount of debt you owe. And I want to take just a little bit closer look at these factors and others that can make up your credit score. And as you can see, they're listed here. Your payment history. This is huge. This is crucial. A lot of people weren't ever taught this. I know that I didn't learn this until I was similar to my friend, the tale of two friends, right? Anna and Bella. My best friend. It was actually her uncle that taught her and I about payment history. So payment history typically accounts for approximately 35% of your credit score. And this primarily includes looking at whether or not you pay the bills on time. And then the next portion that he taught us was amounts owed. So amounts owed typically account for approximately 30% of your credit score. Okay, so the amount you owe depends on about two major factors, and that's how much you actually owe on your credit cards and loans, and then what percentage of your available credit you're using. And this is a key nugget of information. Typically, people who are using less than 30% of their total available credit, they would actually get the better credit scores, right? Because you're not maxing out the credit. And for many of us, when we first heard about credit cards, it may have been on a college campus. There's a table set up, and someone says, "Hey, if you sign up, I'm from Bank of XYZ. You sign up for a credit card with me today. I'll give you a free T-shirt." I know that's was one of my first examples of learning about credit history and credit cards. And yeah, I wanted that free T-shirt, so I just signed my life away, not knowing that maxing out that card would affect my credit history. So another very important factor is the length of the credit history. So the credit history is affected by how long you've been managing your credit. And the longer your credit history, the more information the lender has about you, whether you're a good or a bad risk, essentially. And then, of course, there's new credit. It just typically accounts for about 10% of your score, so not as large of an amount. And then finally, types of credit typically accounts for another about 10% of your score. So it's good to have a mixture of auto loans, credit cards, credit types, different credit types to give you that good mix and just diversify your credit portfolio. So credit scores are extremely complex, and your actions and everyday decisions can influence your finances. So how about someone else's actions, and how can they affect your credit score? Well, let's talk about it on the next slide. Costs of co-signing. Some of us may have fell victim to this, or have done co-signing and it actually worked out favorably for you or someone else. Many people think co-signing on a loan is a helpful action to take, though, especially if the person is like your child, your significant other, a parent, or a close friend. Similarly, many married couples or people in long-term relationships decide to merge their finances, and it's important to know how this decision may affect your credit score. Okay. Additionally, applying for credit on your own or with someone else can affect your credit score. So I just want to caution you to be mindful of your own credit score before making decisions to co-sign a loan or merge accounts with someone else. Adding an authorized user to a credit card, it's also a common way to share credit, but keep in mind that the primary cardholder is responsible for paying the bills. If you both use the card responsibly, it can increase both of your credit scores. However, adding an authorized user can be a risk for the primary cardholder if the authorized user tends to overspend, right? So on the next slide, we're going to discuss exactly what is a credit report. Well, we've talked a lot about credit scores, but what about the credit report? How are they different is the question. Typically with a credit report, it's going to be a snapshot of your credit profile, including your history. Every time you take out a personal loan or apply for a credit card, those actions will appear on your credit report. And so it's important to review your credit report regularly. It's one of the tools to build and maintain good credit. So I want to briefly pause here and share a little bit of a video that I found to be very informational. So I'm going to turn it over to Roxanne here, and she's going to share a local news article from WFAA, right on the money. Thank you, Roxanne.
All right, I want you to think about bills. Unfortunately, not this kind, but that kind. Rent, mortgage, credit cards, car payments, utilities, student loans. You would think that missed payments on those would account for the most dings to our credit reports. But it turns out that a whopping 58% of the unfavorable entries on Americans' credit reports comes from medical bills that were turned over to collections. And Texas has one of the biggest percentages of people who have medical medical debt that's been turned over to a bill collector. By one count, more than 1 in 5 of us has medical debt, which is usually forced on someone. It's not like they choose it like they might a car loan. And unlike a home loan, many times you don't even know up front how much health care is going to cost you. And if you've ever had to decipher a hospital invoice, you know that billing errors can be hard to detect and correct, and they can make your medical debt look even worse than it really is. Because of all of these things, the Consumer Financial Protection Bureau announced March 1st that they were pulling out the microscope to take a closer look at the big 3 credit reporting agencies and hold them accountable for verifying that any bad medical debt that might be hurting your credit is actually accurate. The CFPB also questioned whether unpaid medical bills should even be included on credit reports at all. Well, 17 days after that, the major credit bureaus announced sweeping changes. If you had past due medical bills that went to collections and then you paid up, but that negative info is still sitting on your credit report, those entries will be erased starting July 1st. Also, right now, unpaid health care bills that go to collections can be listed on your credit report after 6 months. Well, starting in July, you'll have a grace period of a full year before it shows up on your credit. And starting next year, the credit agencies will no longer even list medical debt that is in collections if it's less than $500. Hopefully, this will help some credit scores look a lot healthier. And a pandemic bonus, your access to free credit reports has been extended so you can keep them honest on these changes. I have a link for you to get those free reports with today's write-up posted at Jason Wheeler TV on Facebook and Twitter. May you always stay in good health and right on the money.
All right. Wasn't that an excellent value add to this webinar? I love the Right on the Money reports, and you can look Jason Wheeler up on Twitter if you want more information. He's also on YouTube if you want to find out more information about the medical bills, because I know for so many people it's really affected their credit. So I highly recommend having an understanding of what's on your report. So, and on the next slide, we're going to talk about getting your free credit report. And there are 3 nationwide credit reporting bureaus to calculate your credit scores based on the factors that affect it. And many people wrongly assume that checking their credit score or report will affect their credit score negatively, but that's not true. So, in fact, keeping an eye on your credit report can help you in many ways, and it can help you detect fraud and maintain or work towards a better credit score. And you can get a free credit report from each of the 3 credit bureaus per year online or by phone. And you can check out the website, creditreport.com, or you can give a call as well to them via their free telephone number. We do have some additional support resources on page 3 of your participants guide if you need more information about how to do that. And because you can only typically request your Equifax, Experian, and TransUnion credit reports for free once a year, think about spacing out your requests to maintain an eye on your credit reports every 4 months or so. Now, you are entitled to 1 extra free credit report under certain circumstances to verify the information. For example, fraud, denial of credit, unemployment, or if you're currently on welfare. And now that we know a little bit more about credit reports, let's find out how to get your credit score, okay? On the next slide, and I do want to preface that on page 3 of your participants guide, you can find out a little bit more about getting your credit score at your convenience. Take a look at that participants guide. But credit scores, unlike your credit history, are not currently included in your free credit reports, okay? You can get your credit score by requesting it from various companies, including the different credit bureaus. And these credit scores used to be available only if someone, such as like a potential lender, paid for them. Now, scores may be available for free from a number of different credit monitoring websites. So, using these services allows you to check your credit score whenever you want while monitoring your progress in between your annual check of all your reports. Now, we'd like to make more money, right? But even if you find a new job, it may take a longer time to change your income, especially if you need more training or need to go back to school. What do you have some control over is how we manage our money. So once you've requested and received your free credit report, how do you make sense of it? And a lot of folks have asked me that. I get the report, I have no idea how to read it. So let's briefly discuss that. And your credit report will contain essentially four major sections as you see listed here. And what you're going to want to do is review each of these sections thoroughly for accuracy and make a note if you see anything suspicious or anything that's inaccurate. And we'll get into disputing and correcting those errors shortly. So, as you can see, uh, personal information vital, as well as public records, credit accounts. And this section contains information about your debts and whether you have been paying your bills and loans back on time, or you have been missing payments and are possibly at risk for delinquency. So you always want to check that portion out. It can include information about both open and close accounts. And then, of course, the credit inquiries, very important. That section does include information about which organizations, people, and agencies has requested to verify your credit information in the past 2 years. So you definitely want to double check that. I purchased a car once from a vehicle many years ago and made the mistake of not getting the loan through Neighborhood Credit Union. And they ended up pulling my credit over 30 times, and it affected me for many years. So there is some information that won't be included as well, such as medical information, information about your religion, race, sex, of course, and information about checking savings accounts you may have, or information about any debt, like debit or prepaid cards, and of course, private loans that you've received from family or friends. And if you're interested in seeing a sample credit report, you can view one online by doing just a quick search on the internet. Experian, TransUnion, and Equifax also have sample credit reports on their websites. So, requesting and viewing the information on your credit report is the first step towards maintaining and building healthy credit. So, I want to talk a little bit about some important things to look for. Okay. So, on the next slide, let's talk about those dates. It's important to review your credit report regularly to make sure the information is accurate and up to date. Your credit report contains information about your credit history and how well you manage debt. It can also be affected by public records such as bankruptcies, unpaid debts or bills, or how much of your available credit you're using. And most of these types of information can remain on your credit report for up to 7 years. So, additionally, bankruptcies, they can remain on your credit report for up to 10 years. And certain tax liens can remain on your credit report indefinitely if not paid off. So, as you can see here, you can look at these dates very carefully. Um, the date your account was opened, the delinquency date, date of public records, and date of credit requests. So, if you've noticed any errors, you must dispute the errors with the credit bureaus. I highly recommend following up with that. And on the next slide, we'll discuss a little bit about that. And reviewing your credit reports thoroughly is a good practice. If you come across information that is incorrect or fraudulent, you can take action. There are some steps that you can take if you need to dispute items on your credit report, and we'll review those steps now. So the three steps are obviously, you know, writing a letter to the credit reporting agency and telling that credit reporting agency those items are you think they're inaccurate. It's always a good idea to send a certified um, letter. And by law, credit reporting agencies must investigate those items in question unless they consider the dispute frivolous. And then, of course, send the information to the information provider. So that is the person, company, or organization that provides information about you to the credit reporting agency. And fixing incorrect information is an important reason for reviewing and checking your credit report regularly. But what happens if you have experienced an unexpected life event, such as job loss, expensive medical issue like we were discussing earlier, or divorce, or you just, you find yourself in a lot of debt? Well, on the next slide, as you can see, if you've been through an unexpected life event, there are steps that you can take to reestablish your credit. They are very similar to how you establish credit. And monitor your credit report and scores. And you can do that on our local NCU app as well. So we do provide that resource convenient at the touch of a button on your phone on our award-winning mobile app. Also, just paying your bills on time and regularly, and nothing builds credit faster than regular and consistent payments. Also, get credit counseling. I have put in the chat box information about our partners, Green Path Financial Wellness. Actually, they'll be leading a webinar for us next month, which I'm very excited about on fighting inflation. I'm very much looking forward to that. Green Path offers debt management plans, resources to help you save money, get out of debt. Maybe you're wanting to purchase a home. They can help you find the right path. So the information is in the chat box if you have any questions or would like to speak with someone directly. And consider financial products as discussed, getting a secured loan or credit card to build your credit. Um, we have options as well with our savings builder loan to help you with that. So I do also on the next slide want to discuss the Credit Repair Organizations Act, which helps protect your rights, including preventing credit repair organizations from engaging in deceptive practices. And unfortunately, this does happen. Things like false advertisement that can harm you. In other words, credit repair organizations may not overpromise, for example, to delete all bad credit, regardless of whether it is legitimate debt that you have accrued. Also, credit repair services cannot demand advance payment, must put contracts in writing, and must offer consumers contract cancellation rights. So, in the next section, we will actually identify a potential scam from credit repair companies. So back to our friend Anna. She is trying to rebuild her credit, but is having trouble keeping up with her credit card payments. And she's researched several credit repair companies. And let's see if we can help her recognize the good from the bad. And you can discuss more about credit repair scams in your participants guide on page 3 at your convenience. Definitely take a look at that. So the company that Anna went to is promising to remove bad credit information from Anna's report, and all she has to do is pay an upfront fee. So Anna is slightly worried about her bad debts, but the company assures her that it will scrub all the negative information from her report. The company also advised Anna just don't contact the credit bureaus directly, since doing so will negatively affect the company's efforts. So, the company that Anna found in her research promised to remove bad credit information from her credit report and required her to pay fees to remove bad credit notes from her report. Anna should not trust a company promise like that to remove her bad credit notes from her credit report for an upfront fee. And according to the Federal Credit Repair Organizations Act, credit repair companies must successfully remove the credit inaccuracies from an individual's report and provide proof that the report has been changed before they can even request payment for services. And that could take up to 6 months. So that right there is a red flag. Anna should also be suspicious of any company that promises or guarantees to remove all bad credit information. That's a red flag too. Anna should not pay anyone fees up front or before the services have been delivered. And Anna should not trust any company that promises to remove negative credit information that's legitimate. Credit repair companies can only remove negative credit information if it is incorrect or a result of fraud. If a company requires you to claim that inaccurate negative information on your credit report is false, that's a red flag too, if it's accurate negative information. So Anna should not trust any company that recommends or advises against contacting the credit reporting bureaus, because that's also considered to be a red flag. And on the next slide, it discusses those red flags that we just went over from our example, as you can see here. So, another few things I want to highlight is asking for a signature on blank paperwork. That is a red flag. Credit profile number scams or fake social security number scams. If they are asking you to use a fake social security number or apply for an EIN number, that is definitely considered very very scam worthy. So credit report companies can help you spot and remove incorrect or fraudulent information on your credit reports. And credit counseling agencies can also help you improve your credit. Okay. So, when it comes on the next slide to credit counseling services, if your credit report is poor, you may consider taking advantage of credit counseling services. And many agents offer a free initial session. And these agencies may help you create a financial plan to decrease your debts. And on page 5 of your participants guide, you can, work on your debt management plan at your convenience. So, as we transition to the next slide, we want to just briefly touch on strategies to improve credit. We've covered a lot of things that could potentially affect your credit, but the good news, a few good habits and strategies around managing your credit and debt can go a long way towards helping you keep your credit score high. And here are some basic strategies. Again, using your credit wisely. I cannot reiterate the importance of using less than 30% of your available credit. Don't max out those credit cards. Pay your bills on time. Pay off your loans on time. And again, do not apply for several credit accounts in a short period of time. So consider a debt management plan to reduce debt. And again, utilize our partners at GreenPath Financial Wellness. That is what they specialize in, debt management plans. Create and follow a monthly budget. As hard as it is to do with inflation at an all-time high, now is the time to eat at home, right? Shop at the grocery store, have a monthly budget for that. And periodically review your credit report for accuracy is huge. As we are coming to a close, I just want everyone to be mindful of your spending and monitoring your credit. Those are good habits to develop and building and maintaining your credit. So your credit score, as we close, is something that can affect your entire financial life. So make sure to take good care of it. A good credit score can help you achieve more of your financial dreams. And if you have bad or poor credit, don't be discouraged. Some of us have been there before and have come out of it, and you can too. Keep track of your credit reports on a regular basis and adopt responsible credit habits so that your credit score can be as high as possible. And it can be an uphill battle and may seem like it's taking a very long time, but making small changes now can actually have a big payoff later. So I am going to close out our webinar for today, and we are going to stop the recording. And again, I want to thank you for joining us for our credit reports and scores webinar for today.